So the Federal Reserve is going to continue hiking rates, and they have a plan. It's a real insidious plan that will break the world. We just had the United Nations coming out begging the Federal Reserve not to hike rates anymore. According to their statement, excessive monetary tightening could usher in a period of stagnation and economic instability. But I want us to pay attention to this next statement from the UN. They stated, if you want to use only one instrument to bring inflation down, the only possibility is to bring the world to a slowdown that will end up in a recession. And the UN knows the Federal Reserve is using interest rates as a tool to destroy demand globally to fight inflation, and they're calling power out on it. But make no mistake, the Fed is going to continue, they have no choice. And let's quickly recap the disasters that happened over the past few weeks. 1. Saudi Arabia is cutting oil production. This will keep energy prices high. Russian oil and gas are off the markets for the West, and more importantly, US core inflation has gone up in August, soaring to 6%. The Fed tracks this sticky inflation very closely, and it is spiraling out of control on its way to the moon. And this is very bad news. It shows inflation is still the biggest enemy out there, and the Fed has no choice but to keep hiking rates. And the markets know this. They are forecasting an 82% chance the Federal Reserve is going to hike by another 75 basis points in November, and a 100% chance they will do at least 25 points. So guys, we have to prepare for more pain because the Fed is not going to stop. The only way they will pause is when something breaks in the economy, and it's going to be the unemployment rate. And the job numbers that just came out a few days ago isn't good news for the Fed. In fact, it is highlighting that Powell is failing in his job and he needs to go further to crush inflation. What we have is unemployment falling down to 3.5%, and that's a record low. And the job market has gained an additional 263,000 jobs. Now, to you and I, we know the economy is still broken, but to the Fed, it is a sign that they are slacking and not doing enough, especially as the presidential midterms are coming up. So when you stack up all these inflation disasters happening, Powell is going to have to jack up interest rates. I don't think he's going to give a damn about what the UN has to say, and everyone around the world is going to suffer. And I keep circling back to the Federal Reserve's dual mandate because we really need to understand it. And according to the dual mandate, they are in charge of ensuring maximum employment and price stability. And this means in an ideal world, we will have everyone having jobs and inflation at 2% or below, but having both is a fantasy that can't really last. And if we take a look at the unemployment rate in blue and the core inflation rate in red color, we can see that it rarely happens. Having both low unemployment and low inflation doesn't last for long. The closest we had in recent history was between 2010 to 2020, when inflation was steady and unemployment was falling from 10% down to 3.5%. And across history, every time inflation and unemployment get close together, they begin to diverge. Just take a look at the recession of 08, 2000 and 1990. Inflation reacted early and went up because money became cheap and people started to spend more. Then the Federal Reserve comes in and jacks interest rates up, unemployment eventually catches up, and people lose their jobs. Now, I want us to think about this. How was it possible that in 2020, after a worldwide crisis and global lockdowns, unemployment fell from 14% all the way down below 4% in just a matter of months or a year at the most? Remember, it took over 10 years for unemployment to recover to the same levels after the 08 housing crisis. And it was because the Federal Reserve, they came in, they printed up tons of money and began injecting it into the system, right? And normally we love to focus on the stimulus checks, that $1,200 of free money everyone got, but that's just the tip of the iceberg. The Fed set up a special purpose vehicle in 2020 and they loaned out tons of monies to corporations and companies to keep them afloat. Now, these are unsecured loans. And in fact, if you remember those PPP loans, businesses could actually default on them and get away scot-free. I think it was 25 grand and below. If your business defaulted on that, you would be forgiven. And according to the Federal Reserve themselves, more than 90% of the 800 billion of PPP loans were forgiven. And this is extremely shocking. So the Fed essentially gave away free money to companies and that sucked out all the unemployment from the system. They created an artificial employment boom and created a lot of zombie corporations. And together with near zero interest rates, these companies they went out, they borrowed even more money to expand. So they were on a hiring spree and they helped the Federal Reserve achieve maximum employment, right? And that's the first goal of their dual mandate. But here's the big problem. Inflation takes time to manifest. It took around a year for the money to work its way through the system and cause prices to soar. And now the tables are reversing, right? We have Powell hiking rates month after month to crush inflation. He cannot control the supply side of the equation, so he has to destroy demand and make everyone poorer so they just can't buy anything. Now, the unemployment rate today is still too low, wages are still too high, and people still have money to buy stuff. And that's why it's going to continue hiking rates until something in the economy breaks, and that's going to be the job numbers. And let's recall the Fed's mandate once again. When unemployment is low and inflation is high, the exact situation we have today, they have to attack the inflation problem, which is what they're doing now. And all these rate hikes, they're going to take effect sooner or later, right? It's not an instant cure. The Fed isn't stupid. They definitely know this as well. And if we take a look at the bond yields of corporate debt, it has spiked by an insane amount. The yield on the US corporate debt has almost tripled from 2.1% a year ago to 5.7% today. Even the yield on the AA rated bonds has almost tripled from 1.8% to nearly 5% as well. And just ask yourself a simple question, guys. How many companies can keep up with double or triple the borrowing costs? Maybe you were paying $20 million only on your bond interest payments last year. Now you have to pay $40 or even $60 million going forward. Something will eventually break. Companies will either stop borrowing money and sacrifice growth, or maybe they do take out loans, but the interest payments will eat away at their profits. And either way, the end goal is the same. Layoffs will happen and the unemployment rate will rise. The demand destruction that the Federal Reserve wants will come. It's just a matter of time. A lot of companies are already firing workers. Even GE, General Electric, has laid off hundreds of jobs. 20% of their wind power workforce are now unemployed. Companies just can't sustain the higher cost of borrowing and higher wages, and this is just the start, guys. However, this slowdown in the United States is only one part of the demand destruction story. The rest of the world is also going to slip into a recession and have their own unemployment crisis. Demand destruction is going to go global, and as the Federal Reserve continues to hike rates, whether this is intentional or not, pain will be coming. And the UN knows this. They specifically mention the current course of action is hurting vulnerable people everywhere, especially in developing countries. We must change course. The Fed rate hikes are putting countries in a very terrible spot, guys. We must understand that the whole world is interconnected through the US dollar system. 70% of global trade is done using the US dollar. So if you want to buy commodities or oil, you need the dollar. And the story gets worse. More than 60% of global debt is denominated in US dollars as well. So as the rate hikes continue, companies and countries they are rushing out to buy dollars to pay off their obligations. So we have to realize that interest rate hikes aren't just hurting the American economy, it is destroying the whole world at the same time. Global demand is going to come down, especially for energy, and that is what the Federal Reserve is counting on. Because it is not just over 300 million people in the United States getting poorer, it will be billions of people around the world becoming broke as well. So I hope you can see this chain reaction. When the Fed hikes rates, it is a magnified effect that goes beyond the shores of the United States. And that's why we are seeing so many currency crises popping around the world from UK to Asia. No one is truly spared. And let's take Europe for example. Winter is coming and the rate hikes are not stopping. This will force the Eurozone to make a lose-lose decision. If the Fed hikes and the dollar gets stronger, Europe only has two choices to react. The first to sell off their US dollar cash reserves to defend the euro. They have to drain their forex reserves to prevent the euro from falling any further. It has already crashed over 14% to date. Now the second is to also hike rates and join in the slowdown of their economy. They will join in the demand destruction because their inflation is out of control. Massive layoffs are coming for the Eurozone. And when everyone is poorer, no one can buy anything and inflation will come down. Now they have to make those choices because if they don't do anything, the euro will likely crash even further and imports will become more expensive. And that's another type of demand destruction through currency depreciation. So you kind of see where all roads lead to, right? When the Federal Reserve starts hiking rates, it starts a global chain of demand destruction, which in theory is supposed to push down inflation. So when the layoffs eventually happen, it won't just be the US suffering, we will all be in pain. Welcome to globalization, guys. We are united as one, sharing a recession together. And this is why the Federal Reserve, they are tiptoeing around their rate hikes. I'm very sure Powell is aware of the butterfly effect of their actions, especially towards developing economies. Those economies are more fragile than the United States and they will get whacked harder. In fact, the UN has compiled two charts that I have to share with you guys. It shows us how critical this rate hike situation is for the smaller economies. Now, the first is the lost economic potential. So we can see that because of the rate hikes, a lot of developing economies are going to hurt more. The US will see a GDP gap of minus 4.5%, but a developing country like Indonesia is going to suffer a gap of minus 9.2%. That's double the effects of the US. And now, interestingly enough, Saudi Arabia is going to do the best. Their GDP is going to grow even further because their number one export is oil. Now, the second chart tells us how bad this currency crisis is getting. And if you think the euro or the pound is getting destroyed, other currencies are having it worse, guys. We have the Sri Lankan rupee dropping over 77% against the dollar, the Turkish lira is down 31%, and the Argentine peso has also fallen by 23%. So demand destruction through a currency crash is very real as well, and it could get much worse. Interest rate hikes are hitting the poorest nations the hardest. And if we look at Latin America, we can see Argentina has the most dollar denominated debt at over 50%. And as interest rates go up, they are going to be in a world of trouble. They have to scramble to buy US dollars to settle their bond payments. They have no choice but to sell more pesos for dollars. And this is once again demand destruction from a currency crisis. And this is only going to get worse, guys. A report has shown that the world is inching towards a $1 trillion debt crisis. They will have to refinance their old loans with a new higher interest rate. And we can see refinancing costs for countries all over the world soaring to the moon. And this is not sustainable. We might have to prepare for sovereign debt defaults very soon. So the Fed's rate hikes, they are like weapons of demand destruction. It damages their own economy for sure, but the effects are amplified across the world. Yes, inflation will get crushed, but everyone else will also get crushed, and we could see more bailouts from the IMF. Demand destruction will continue, and it's like a one-way street, right? We have seen from the UK that you can't try to cut taxes and stimulate your way out of the recession. That is inflationary and will cause even harder rate hikes down the road. You have to let the recession play out. And the whole world is moving towards one. Even if you try to grow your economy, who has the money left to buy from you? And that's why many countries together, they are tightening to crush demand. And the only solution I can see is for the US to pump more oil and unleash American energy. They need to tackle the supply side problem, and this will increase the supply of oil, bring down energy inflation, and slow down rate hikes. There's a global need for energy, so it won't be inflationary. It will drain away more of the excess dollars in the system and bring down inflation. But as we all know, the future is green and we need solar power, right? So that is off the table. That probably isn't going to happen anytime soon. And we need to prepare for further chaos and job losses down the road. Demand destruction won't stop. So let me know what you think. How will this end? Will the Federal Reserve listen to the UN and slow down their rate hikes? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.